Welcome to Geojit Spotlight. The market continues to rally, showing remarkable resilience. In July alone, so far, the Nifty is up by more than 550 points. To get the issue in perspective, investors should understand the nature of this rally and the factors powering this rally. First and foremost, this is a global rally. I have said this before, but I am again repeating this because it is hugely important. The main pillar of support for this rally is the strength of the US economy. Stock markets expected the US economy to tip into recession by mid 2023 and discounted this potential recession and its impact on corporate earnings in 2022 itself. On earlier occasions, when the Fed raised interest rates sharply, the economy had tipped into recessions and the stock markets had corrected, anticipating that. But now there are no signs of recession in the US and corporate earnings are better than expected. So the market is repairing the damage done last year. It is compensating for the excessive pessimism of 2022. In India, we have the extra push being given by sustained foreign portfolio inflows. In May and June, FPIs invested massively in India, and this investment continues in July also. If we include the bulk deals, the net FPI figure in July so far is more than 32,000 crores of rupees. The optimistic stance of the FPIs stems from India's very good economic performance. Even in a slowing global economy, India's GDP is expected to grow by more than 6% this year also, making India the fastest growing large economy in the world for 3 years in a row. In this backdrop, the market is likely to remain resilient. The trend is up, but high valuations remain a concern. In last week's message, I had suggested to watch the results of IT companies and listen to management commentary. It was also mentioned that the results will not be good, but the stocks can rally on some positive commentary. This has happened with an up move in IT stocks, particularly a sharp rally in Infosys. A question that many investors are asking now is it better to sell now and buy later when the market corrects? Unfortunately, this strategy, sell high, buy low, is good in theory, but doesn't work in practice always, most of the time. So remain invested in this rally. But if an investor has invested for realizing some financial goals, and if these goals can be realized now, then it makes sense to book profits and use the money for the realization of these financial goals. But for long-term investors, it is important to remain invested because for the coming many years, India will be the fastest growing large economy in the world, and this will reflect in the stock market also.